Hello, Maverick Traders. This is Imri, and welcome to today's currency recap. It is June 22nd. So stocks have broken a 3-day losing skid. Oil definitely slumps on the day. Gold is down, and cryptos are holding steady. In terms of currencies, the yen is underperforming while the loonie is outperforming today. All right, let's get into it. So the S&P 500, we've pulled back over the last 3 days, and then today we kind of snapped that streak. We'll see whether this is a bottom or not. Obviously, we can see how price is a little bit away from the 20 and 50 period moving averages, but nonetheless, my next upside target remains in focus, which is 45.12. Can round that up to 45.13, I suppose, which is the next pivot point on the way up. Over in the 10-year yield, I suspect that we might trade sideways for a little bit longer still, and then we're going to get a break. We're either going to get a run higher towards 3.9% or break lower to tag that 50-period moving average, which comes in around 3.6%. Technically, I think this market is as close to a coin flip as you can call it, but if I have to, I would lean slightly bullish here on the yield. It'll be interesting to see how stocks hold up in the face of that. Okay, and then in crypto, I've been talking about this descending channel for a while, and finally we've broken out of it. How much further we go from here, I don't know, but 33,326 is clearly in focus, and I do believe we will take that out to the upside. I think Bitcoin has a resistance range coming in anywhere from 34,000 to 36,000. What happens after that is going to be very, very interesting, but I'm getting more and more cautious with the price action in crypto here. It was a nice run up in a lot of the altcoins as well. And now I'm getting, like I said, very cautious as we're reaching technically overbought conditions. Okay, so in terms of the market outlook, sticking to a +3 here, everything is a go. We're above both moving averages and the slope remains positive. In terms of news, tomorrow we've got a lot of European data coming out overnight, early morning, and then we have some manufacturing and services data coming out of the US a little bit later on. So if you're in any European currencies, specifically the euro and the pound trades overnight, just be very cautious with those because this news could definitely be a market mover for your trade. So make sure you're either aware of these news events and if it's in your trading plan to ignore them entirely, that's fine. But if it's not in your trading plan to ignore news altogether, I would really recommend taking a look at your stop losses and your open exposures and adjusting anything if need be. Okay, moving on now to some currency analysis. Kicking it off with cryptos. So we had this large run up right after a pretty sharp sell-off, and we're holding the bid. We're holding the line. There aren't really too many people rushing for the exits here to take profits, which is really interesting. So I think if this holds up over the next few days, we could see that translate into yet another pop higher in crypto. But like I said, the price action has got me feeling nervous just because of how overbought technically we are. I'm not saying rush for the exits now. I'm just saying be careful of any pending reversals. And the volatility in the asset class will make those reversals likely very swift if/when they do occur. So just keep that in mind. On the fiat currency side, like I said, the yen underperforming. We're now in borderline historic territory in the yen basket, custom basket that we're tracking. We're going to check that out in a little bit. The Canadian dollar and the US dollar outperformed today, and then the Europeans were all up on the day as well, and the Aussie and Kiwi underperforming alongside the yen. Interesting, right? I mean, we typically think of the Aussie and Kiwi as risk-on currencies. Stocks have snapped a 3-day skid, and yet the Aussie and Kiwi are slightly underwater on the day. Okay, so in terms of velocity, I think there's a pretty clear theme here. I think we can definitely look to continue to play yen weakness, but it's becoming a tougher and tougher trade just because of how overextended the yen is getting to the downside. So velocity score aside, because this is a short-term snapshot of velocity, just really, really watch the charts closely and make sure you're waiting for those bear market rallies or low bases if you want to trade breakdowns in the yen. Okay, moving on now to some possible trades, taking a look at some currency analysis. We're going to kick things off with the yen. So just going to a monthly chart, you can see how we're pushing the extremes from 2007. Of course, what happened in 2007? Well, I guess more so in 2008, but yen volatility just went through the roof in the wake of the global financial crisis. Is history going to repeat itself here? I'm not saying it will. I'm not saying it won't. I'm just saying this price chart is fascinating. If I'm looking at the RSI, you can see we're not yet oversold on the monthly chart on the yen. But if we do reach an oversold reading, I will be getting extremely nervous about continuing to be short yen. Doesn't mean that it's not going to be the right trade any longer. I'm just saying it technically, geez, things are getting pretty stretched out here. So I don't like picking tops and bottoms. I really like waiting for the market to prove itself before I hop on board. And right now, the proof really seems to be pointing towards a weak yen. So I just think one day we're going to get a massive bottom and a reversal. But as of today, that time has not yet come. Moving on now to the dollar. So I said we would bounce in the dollar after that last week's really sharp sell-off. And, that's exactly what's happened. The bounce seems to be pretty anemic so far, and I do think eventually it will be sold. In the meantime, however, I do want to see the dollar reclaim the 50-period moving average before we start its next leg lower, so just be on the lookout for that. The Swissy recovered, after some fairly rough overnight trading, it's recovered, but geez, it just doesn't look that good to me. I think there's a big wall of resistance here. I have no real interest in being long the Swissy until we break out of this blue trend line structure here. So while it's within the structure, I'm not too keen on trading the Swissy too much. And now for the euro, we've broken through this resistance, and now the euro is looking a little bit stranded up here as we're reaching technically overbought conditions. That's one other catalyst, I think, technical catalyst that could drive some monetary flows into the US dollar if we do see some euro weakness here. Pound. So I've been long the pound. I've been talking about why I'm long the pound for a long time now, going back to, I'd say, March. That trade has worked out really well. I'm now neutral the pound. This is extremely stiff resistance in the pound. Going back to 2018, I'm completely flat the pound, and I'm looking for signs of a pending reversal. I think the risk is skewing dramatically to the downside in the pound right now. In terms of the Canadian dollar, so pointed out this head and shoulders pattern, and we took a neckline measurement of it a little while back. And as you can see, we still have a little bit further to go before we reach that neckline measurement. So for that reason, I'm going to continue being bullish the loonie until we reach this area of congestion from mid to late November 2022. Aussie dollar broken out, come back, and we're now testing the breakout zone as potential support. This is where I'm neutral the Aussie. I'm not terribly shocked to see us pull back to here. I'm a little bit surprised at how quickly we came back and gave back a lot of those gains. So we have to see now if we're going to form some kind of tradable bottom here. But if we just plunge right back through this broken resistance zone, then it's back to the drawing board for the Aussie. And then finally, the New Zealand dollar. So this is kind of what I was talking about, right? I was thinking we'd rally back into this resistance area and then we'd come back off. Well, we're so far playing according to the script, but I just don't see a real convincing move here in Kiwi. Kiwi Canada is worth a look, perhaps, at some potential shorting opportunities, but the volatility in that currency pair is going to be relatively low. So just something to keep in mind. And all right, that wraps up our currency analysis. So in conclusion, lots of European data out overnight. Be very wary and careful of that. And as always, focus on the currency in play. And of course, as always, focus on proper position sizing. That's it for me, traders. I'll see you guys next time.